Opendoor just delivered the kind of rebound day that the open army desperately needed. After 4 consecutive red sessions, the stock came roaring back on Wednesday, closing up $1.14, or 16%, to finish the day at $8.22 per share. For shareholders who have been riding out the turbulence, this bounce was more than just numbers on a chart. It was a sigh of relief. A sign that confidence may be returning. And maybe, just maybe, a hint that the storm of institutional selling and panic-driven downturns is starting to pass. What makes this rebound even more interesting is that it wasn't just about technicals or a dead cat bounce. There were real catalysts at work today. On the macro side, August new home sales data came in stronger than expected. That data point matters. Housing is one of the most rate-sensitive sectors in the economy, and every sign of resilience or growth in that market has a direct impact on companies like Opendoor. When new home sales are up, it signals demand. And demand is the lifeblood of a platform that depends on buying and selling homes at scale. Investors will remember that at the last earnings call, the old board set a cautious tone. They gave soft projections, warning of lower activity for the next 2 quarters. But the housing market doesn't stand still. And the stronger-than-expected August sales suggest that those conservative projections may have already underestimated the reality. If the market holds up better than expected into the fall and winter, Opendoor's Q3 and Q4 numbers could surprise to the upside. That macro tailwind was part of what lifted the stock today, and it gives shareholders a reason to believe that the company's future isn't as constrained as the old board once implied. But the real story of the day came from inside the company, not outside. Kaz Nejatian, Opendoor's new CEO, took to Twitter and revealed that the company is rolling out a series of internal tools called MCPs, all connected to a system built on LibreChat. And on top of that, he announced that Opendoor Assistant, an internal AI agent designed to make employees more efficient, officially shipped this week. Now, at first glance, that might sound like a typical Silicon Valley announcement. A new productivity tool. Another piece of internal software. But if you look closer, it fits into the broader reset that Kaz is driving. Because these AI tools are about more than efficiency. They're about re-architecting the way Opendoor operates. Kaz put it simply in his tweet, "These AI systems are designed to take away toilful, repetitive work that machines should do, so employees can focus on higher-value activities." That's not just a productivity boost. That's a fundamental shift in how labor is allocated inside the company. And when you combine that with the return-to-office mandate that Kaz announced earlier this week, you start to see a picture emerging. Opendoor isn't just expanding nationally. It's not just rolling out new buyer products. It's also reshaping its workforce and its culture to be leaner, faster, and more efficient. This matters because both Keith Rabois and Eric Jackson, 2 of the most vocal proponents of Opendoor, have been clear about their vision. They don't want a bloated, slow-moving organization. They want a disciplined, accountable company that can execute with speed and precision. And the tools Kaz is rolling out, along with the cultural shifts he's enforcing, point directly toward that vision. Think about the sequence of events. First, Kaz eliminated outside PR agencies and brought communication in-house. That was about accountability and directness. Then, he announced that Opendoor would become an in-office company starting September 29th. That was about cultural reset and execution discipline. And now, he's introducing internal AI agents and process automation to strip away the grind and make the workforce more productive. What does that all add up to? It adds up to a company that is not just growing for the sake of growth, but growing smarter. A company that is becoming leaner, not fatter. A company that is building efficiency into its DNA, rather than outsourcing or piling on bureaucracy. And that's exactly what long-term shareholders should want to see. Because let's be honest, Opendoor has always been a high-potential company, but it's also been criticized for burning cash, moving too slowly, and carrying too much overhead. That's why shorts were so comfortable piling in. They looked at the old Opendoor and saw a bloated operation without the discipline to turn potential into profits. But the new Opendoor under Kaz is actively dismantling that perception. It's sending a clear signal: this is not the same company it was 6 months ago. This is a reset. The AI rollout is a perfect example of that. Most companies talk about AI in the context of customer-facing features. Smarter pricing algorithms. Better user interfaces. But Kaz is starting with the internal side. He's using AI to empower employees, to reduce the hours wasted on repetitive tasks, to free up brainpower for innovation. That's how you build a culture of speed. That's how you cut the fat without making messy layoffs. By making the work itself more efficient, you organically thin the workforce, as those who aren't adding value fall away and those who are aligned with the mission thrive. It's a strategy that ties back to the Shopify DNA we've talked about before. At Shopify, Kaz saw how you could build a platform that merchants depended on and then expand into adjacent services. But he also saw how important it was to keep the organization lean, efficient, and relentlessly focused on execution. At Opendoor, he's bringing that same philosophy, but applying it to an even bigger challenge: real estate. Now, let's connect this back to today's rebound. After 4 red days, the 16% surge wasn't just a technical bounce. It was a validation of conviction. It showed that investors are paying attention not just to the stock price, but to the substance. Strong housing data gave confidence on the macro side. Kaz's AI announcement gave confidence on the internal side. And together, those catalysts reminded the market that Opendoor isn't standing still. It's moving fast. For shareholders, the key takeaway is that the long-term growth reset story remains intact. The access industry's exit last week created a lot of noise. The panic selling that followed made it easy to think the narrative was breaking down. But today showed that the conviction of leadership, the resilience of the housing market, and the new efficiency tools being rolled out are all pointing in the same direction. Of course, we can't expect every day to be a 16% rally. Volatility is part of the journey, and there will be more red days ahead. But what matters is the trajectory. And the trajectory is being reshaped by a leader who is not afraid to make bold moves. Kaz isn't waiting for months of debate or endless consultant reports. He's executing fast, just like we've seen in the past week. Cutting out PR middlemen. Bringing employees back to the office. Shipping internal AI agents. That's the kind of decisive leadership that creates cultural momentum. And when you combine that with macro tailwinds like stronger home sales and potential future rate cuts from the Fed, the setup for Opendoor becomes compelling again. It's not about whether the stock is at $7 or $8 today. It's about whether the company is positioning itself to thrive in the quarters and years ahead. And based on the actions we're seeing, the answer looks more and more like yes. So where does this leave us as investors? It leaves us with a company that is rebounding, not just in stock price, but in narrative. It leaves us with leadership that is aligning the workforce, not just through mandates, but through technology that makes people more effective. It leaves us with insiders like Eric Wu showing conviction by buying millions of dollars worth of stock. It leaves us with a housing market that is proving more resilient than expected. And it leaves us with a reset story that is only just beginning to unfold. The open army has been tested over the past week. 4 consecutive red days, a brutal sell-off, and institutional exits created doubt and fear. But the bounce today, supported by both macro and internal catalysts, is a reminder that this story is far from over. In fact, it may be entering its most important chapter yet. Kaz's tweet today wasn't just about shipping an AI assistant. It was about signaling a new era of efficiency. It was about telling employees and investors alike that Opendoor is not going to waste time on toilful work that machines can handle. It was about freeing the human side of the company to focus on innovation, speed, and execution. That's the kind of reset that turns potential into performance. And that's why today's rebound felt different. Opendoor is still volatile. The stock will still swing. But underneath that volatility, a new foundation is being laid. A foundation built on efficiency, accountability, and technology. A foundation that can support not just survival, but growth. And for those who believe in the mission, in the main quest of making home ownership simpler, fairer, and more accessible, today's bounce is a sign of things to come. This is not the end of the journey. It's just the beginning.